Is Bitcoin going to 32K by October 2026? In this video, I'll make the case for why a total 70% drawdown from the peak back in October of last year is not as likely as a lot of people seem to think. Watch to the end and you'll understand why that's the case. So first of all, a really important thing to look at is the 200-week moving average, which has historically been very strong support for the Bitcoin price as measured in US dollars. In fact, it's so strong that the only time it's ever been broken for any meaningful length of time was at the bottom of the 2022 bear market, which, by the way, is a lot different from this bear market. 2026 is not 2022 or 2018 because in 2022 we had the UST and Luna collapse, we had the FTX collapse, along with the blow up of all these other lending and borrowing platforms like Celsius, BlockFi, Vald, and a whole bunch of others. So all of that created just a cascading catastrophe and panic throughout the market. A bunch of cross-collateralized leverage had just wiped out a bunch of capital, right? Everything unwound and created this huge market shift, this just waterfall of selling. That's not the case this year. And the asset was also much smaller back then. The market cap was not as big, although now we are at a point where it is roughly the same size as it was at the peak of the last cycle in 2021. And in 2017, for example, there was a 20x rise, more than that. I mean, in early 2017, Bitcoin was trading around 1,000. And then by December, it was trading at 19, 20,000. So it makes sense that there would be a steeper drop after that much of a parabolic rise and euphoric top. This time around, we only had about an 8x from the lows of the bear market to the peak of the bull market. So it makes sense that the drawdown would not necessarily be quite as severe. And we also peaked in sort of apathy this time around. There wasn't total euphoria like there has been in previous bull markets at or near the peak. Going back to the 200-week moving average, it's currently sitting around 58,000. And interestingly enough, the price has not gone below 60,000. When we had that big, scary, really rapid drop back in February, 60,000 was the support. So right now, that is the local low. It could wind up being the cycle low. Who knows? But the odds are in favor right now, at least, of that being the case. Doesn't mean another dip back down to retest 60,000 or 58,000 can't happen. It totally could. The 200-week moving average is holding up so far. So until that breaks, remember this, until that line breaks, there's not a very good case to be made that we're going down to some arbitrary level of, 50,000, 40,000, 32,000. Some people even say, 10, 12,000 because, that would be 90% of a drawdown. But there's really no evidence for that. And almost all of these calls are just coming from a very myopic perspective of, well, past drawdowns were this percent from the peak, so that's exactly what's going to happen this time. But that is just a little too simplistic of looking at things, in my view, because there's a whole lot of fundamental and technical reasons to think that that would not be the case. So you have all this evidence for why that's not going to happen. You really only have one piece of evidence for why it is going to happen. So that's why I think this is an important topic, because like most everything else in Bitcoin, it just gets oversimplified and these narratives get thrown out there and they get repeated everywhere, and there's not a lot of critical analysis. Here's another important thing. The previous cycle high has always acted as support during the following cycle bear market. And right now, that's about 68,000 because that was the high in 2021. And it's interesting to note that after that dip to 60,000 in February that I had mentioned earlier, the price has hovered pretty close to 69,000, somewhere between 66 and 73,000 or so. That's been the range for a while now. So that's another thing that would be unprecedented. It would make a drop to 50, 40, 30,000 completely unprecedented because that's never happened before. In the 2022 bear market, the price did fall below both the 200-week moving average and the previous cycle high of 19 or 20,000. So, and the bottom was about 15,000. So it is possible to go below that, go below both those two things. But even then, it's only happened the one time, and it only stayed that way for roughly 6 months. So if that does happen, wouldn't necessarily be a bad thing, because then it would be much more certain that the bottom is very near and that there will be a period of accumulation before the next bull market begins. But I would say it's somewhat more likely, in my view, that that doesn't happen this time around. Here's another thing. The ISM never peaked, International Shipping Manufacturing Index. It never peaked alongside Bitcoin like it has in previous cycles. And this whole 4-year cycle thing is thought to be driven by the halving and the supply demand dynamics behind that. But it might not just be that, or it might be not that at all, because it's also coincided with the broader business cycle, just the macroeconomic conditions. And so if you look at things from that perspective, it could even be possible that we haven't seen the cycle high yet. It could be lengthening, extending things, and that we have a repeat of the 2021 cycle where there was a new all-time high in, I want to say April or May of 2021 of 60,000 or so. And then we had a 50% correction. And then later in November, a higher high of 69,000. So it's always possible that we're in that 50% correction right now, and that at some point later this year, the next 6 or 8 months, there's another new all-time high. No one can rule that out. And the ISM is actually a pretty strong point for that thesis, although I wouldn't say that's my base case. It's probably one of the less likely scenarios, but it can't fully be ruled out because ISM has been going back up. And the other thing there's a correlation with, before I move on to the next point, I've talked about a lot of these things before in about the middle of February on my podcast and on my newsletter, Hard Money Dispatch. Go ahead and subscribe if you're not already, because I go into more detail about things there. And even though I've mentioned these things before, I think it's a really important topic, and the price action in this time has become some kind of FUD narrative of everyone saying, this thing's going to collapse. It's going to these very low values, and it's guaranteed. It's always presented as like 100% guaranteed. No other possibility exists. So I'm just here trying to point out the fact that there is strong evidence that other possibilities do exist. And no one knows exactly. Everything's just probabilities. That's the best we can do. But in my mind, given all these points of evidence, it seems like there's a higher probability of something else other than that full-on 70% drawdown and identical repeat of last cycles. So one of the last points here is the correlation between the M2 money supply has broken down this time for what I believe is the first time ever. I could be wrong about that, but from what I've seen, it looks like this divergence is bigger than it ever has been, because for most, if not all, of Bitcoin's history, it has tracked the expansion in the money supply and liquidity, global liquidity, almost on a one-to-one basis, just at a lag, about a 3-month lag or so. So when M2 goes up, Bitcoin follows it a number of months later. When M2 goes down, same thing. And why and how could this happen? Because from, I think it was like the middle of 2025 or so. M2 kept going up, and Bitcoin did not. Bitcoin did for a little while, had its peak, and then even though M2 kept rising, Bitcoin still corrected. And that continues to be the case today. So why would this happen? How could that possibly be? Because the scarcest asset in the world would logically respond to global liquidity, since there's a finite number of Bitcoin or Satoshis chasing an infinite and expanding number of monetary units of fiat national currencies. One reason why it's broken down, some people speculate, is quote unquote paper Bitcoin or derivatives like options, for example. And that accounts for, derivatives trading accounts for about 75% of all Bitcoin trading volume now. So it does seem plausible. No one knows with 100% certainty. Definitely seems like it could be possible, though, that shorting in the paper markets has suppressed the price. Or, and this is a little more scary, it could be that some of the buying has been absorbed by paper IOUs for Bitcoin, and people who think they're buying Bitcoin or institutions who claim to be buying Bitcoin are actually just purchasing paper promises for Bitcoin. Again, that's a whole complicated subject. Entire videos could be made about that, but that's more for someone who's a real expert when it comes to trading and derivatives. So I'm just going to leave it at that for now. So what do you think? Do you think Bitcoin's going to 32,000 by October of this year? Or do you think it's likely that something else will happen? Leave your thoughts in a comment below, and I'll see you next time.